I got 3 starting dates here. This is when Peter Major got into investments. 3rd December 67, February 74. You're going to see why. Who knows what happened on 3rd December other than me getting interested in South Africa? Chris Barnard did a heart transplant. That is the day that Peter Major and the world discovered South Africa. Until then, none of us knew about it. What we knew wasn't worth putting on paper. But yes, Barnard came on TV and the world looked up. And then we found out he's not the only miracle out of South Africa. There's a lot of miracles. There's a lot of world records. And that spurred my interest because the U.S. was very paranoid in the 60s. Everybody was beating us. The Russians beating us in space. The Vietnamese and Chinese beating us in war. Were we fat and lazy? I don't know. And then more things were happening. Gold. The gold price started taking off in 73. Roger Moore, James Bond made the movie Gold at a place called Buffelsfontein, South Africa. So now I had 2 spurs to my interest. Now I had to come here and see what was going on. Most people I've talked to last year, they just want to know about gold. I don't know any more about gold than anybody else. I know even less about the future than anybody else. But I'm an amateur historian, and I'm a fund manager. And when somebody says, where's this going? I said, well, where are you starting? Like somebody says, how do I get to America? You ask them, where from? You know, are you going to start in Cape Town? You're going to start in Joburg? So if people say, where's the gold price going? Well, let's start. Where is it right now? It's a moving target. It's over 2,950. Where's it been? How did it get there? So I can go back 300 years. It was stuck at about 650. There was no inflation in the world. Maybe when the Spanish took over all the gold mines in South America, they had inflation for 5 or 10 years. But then it calmed down. The Civil War, there was inflation a little bit. But essentially, there was no inflation in the world for hundreds of years. Gold was flat, roughly $20 an ounce. But 1912, 1913, the U.S. has inflation. They've just come out of a depression. They printed too much money. They start something called the Income Tax Act. They start something called the central bank. They're trying to get a hold of inflation. All they're doing is creating more inflation. So yeah, gold is starting to fall down now. Still is $20 an ounce, but it's not worth it anymore. Then you had the Great Depression after the big run in stock markets. Roosevelt readjusted our currency. He wasn't going to give away gold at $20 an ounce. You had to pay $35 an ounce for it now. Now, something similar happened from the 30s, the 40s, the 50s, the 60s, the 70s. Inflation just kept on going, so the real price of gold just kept falling. It was unsustainable. Nixon got tired of sending thousands of tons to de Gaulle in France, to people in the UK, so he stopped it. They readjusted the currency. So it went back up, but people weren't sure how far it was going to go before it stabilized. So there's the movie Gold. Gold's taking off. I see the movie. I'm interested. But as soon as I get interested, something falls. It takes me 8 years to get here. So there I start, Harmony Goldmine. Oh, so much for my red dot. But you can see, that's when I got here. The party was over. Gold had fallen in real terms from $2,500 to $1,500. I start on Harmony, it falls another $500. But it does bounce up. The end of 1982, it bounced back up to where you see it. And then it starts down. So it's like a rubber ball. You drop it from a height, up, down, but each bounce is left. So I worked for the gold mines for a few years. I go to the business school. I get a job, national marketing manager, the job of a lifetime. I get to visit all 130 listed mining companies in the country. I was happy. Then I took a job at Allen Gray. You could say it was an accident. Yeah, I accidentally took the job. They accidentally hired me. And what was happening? Gold was still falling. My portfolio was gold analysts. It was 20% of the all-share index. I had amazing peers there. Jack Mitchell was my immediate boss. Jack and I kept analyzing the companies, the gold price, the earnings. We couldn't find value. Alan Gray was a gold bull. He wanted us to find value. We couldn't find it. A year later, while I'm going home on my 4-week vacation, a guy named Saddam invades Kuwait. The gold price shoots up. Alan Gray calls up. He's in London then. Where's Peter? No, he's on vacation. Yeah, well, he doesn't want his job very bad, does he? So I come back 4 weeks later. Now I'm in big, big trouble. Why am I in trouble? Because the U.S. invaded Kuwait. They chased out Saddam. The gold price fell. And Alan Gray had bought a whole bunch of gold shares in the 4 weeks I was gone. So Jack says, your job is to write to the investors and tell them why we bought gold. And I said, but Jack, you and I thought gold was too high. He says, do as you're told. Gold kept falling. I stayed in fund management. I joined a dot-com billionaire 2001, just before 9/11. And ideally, that was the time to buy gold. 2001. All right. I'm just going to talk. I'm a macro guy. I'm not a bottom-up guy like Shone. So we've got a couple other differences, but yeah, I do everything from top down. Shone does it from bottom up. Never the two shall meet. But I think we both added a lot of alpha. I launched the Cypress Mining Fund. You know, you look at the graph. Pretend you were me then. It looked like we're at the bottom going up. We launched it in October 1994. And what happened? You had the tequila crisis, the FINRAN was abolished, metal prices fell, everything went against us, everything. And yeah, that was the slope I had from the time we launched the Cypress Mining Fund down to here. And yet, in the 7-8 years, we did add 11.5% alpha. But it was tricky, it was tough. And when Mark Shuttleworth sold his company, I was lucky. I was number one. We'd just done 130%. We'd added 52% alpha that year, and I got the job. And ideally, you couldn't have chosen a better time to get it. The market was in my favor. Now, look at the title here. It's called Price Relative. Everything at Alan Gray was price relative. Don't tell me something is cheap or expensive without what's it relative to. Our benchmark was the Aussie. You didn't care if the Aussie was going up. You just made sure you beat the Aussie. That was your job. Just beat the Aussie, adding alpha. So as long as you're beating the Aussie every year, you're going to win. I was lucky. I was on the right conveyor belt. The South African stock market beat the S&P 500 for 100 years. Anglos beat the S&P for 90 years solid. Our gold index beat the S&P for 90 years solid. And the gold index averaged 14.5%. The resource index averaged about 13, and our Aussie averaged about 11. So I was lucky. But it's still a cyclical business. But when I say the conveyor belt was right, despite what the ANC says, God did not give us the mining industry. He gave us the minerals, but you need a mining industry to get them out. And there were 3 individuals that coalesced uniquely in time that made that possible. Had one of them not been there, it wouldn't have happened. Oppenheimer was a genius. Financial genius, a diamond genius. He could bring in the money to do it. He could bring in the engineers. Jan Smuts was above a genius. What do they say? There's 3 people known at Christ Church in 500 years at the top, way above everybody else. Jan Smuts was one of them. Einstein said only 10 people understood relativity. Jan Smuts was one of them. You could say Jan Smuts helped start the Boer War, but look who he had to negotiate. Milner was an idiot, and he's a stubborn, cocky, arrogant idiot. Almost like some leaders we know now, huh? But Jan Smuts was a good general, and he brought about the Verenican Treaty that ended the war. He was a pragmatist. He knew when to give in. And what does he do? He helps Buddha create a union in 1910. And Buddha says, great, you're the first mining minister. And he wants to build a mining industry because this country's got the richest ore deposits on the planet. But he needs help. He can't do it on his own. So he lures an ex-South African back. And go onto the internet, buy books on Hendrik van der Bijl. See what that guy was doing. You know, he went to Germany. The U.S. poached him from Germany. Jan Smuts was a good salesman to bring him back here. What the guy built? ISCOR, ESCOM, the IDC, Arms Corps. The list goes on, and he died at 60. But these three people working together are the ones that built the industry here. And I show Harry because there's very few father-son combinations that work like these two. Ernest was smart, but Harry, he knew how to take it. After going for 40, 50 years head of Anglos, he knew how to keep it going into industrials, into financials. So Anglos categorically beat the LC up until about 2010. So price relative, that always gives you a starting point. You know, if something's price is way above your benchmark, it kind of looks suspicious. If it's way below the benchmark, it also looks suspicious. So then you go to price earnings relative. You know, what's the PE relative? And that's always been a starting point for me. It keeps me from buying something too expensive. Like Warren Buffett said, the most important component of your rate of return is the price you pay to get in. Anybody can sell something after it goes up, but the price you pay to get in, that's your margin in case you're wrong. I always try and have 3 great reasons for doing something because I guarantee 2 won't happen. So have 3: price relative, PE relative, and then you've got to like the share. You've got to like the people. You got to like the commodity. Now, I could break down when I made my decisions here. Okay, I think I jumped a couple slides. This is when things did start ending. This is when the wheels came off our mining industry. It started in '87 with the Goldmine strike. I joined Alan Gray in March 1989. The Goldmine strike, led by Cyril Ramaphosa, James Walazzi, it was successful for the unions. They brought the industry to a standstill, and it was widespread, 300,000 miners on strike. They settled in 3 weeks for less than they were offered, but the die was cast. So when I got hired by Alan Gray in '89, I immediately booked a plane back to Joburg and went to see my contacts at Anglo American. I said, look at me, man. I got $4 billion to spend. What's on the plate? They said, Peter, nothing's on the plate. The banks have told the old man there's no more money for gold mines. They're a thing of the past. They don't control the mines anymore. The unions do. And I was shocked. I was naive, but I was shocked. And that was the case. 1987, 1988, everybody knew. The foreigners, the locals, we no longer controlled the mines. The unions did. And we knew what came after the unions. It was going to be the new ruling party. So investment started drying up. Apartheid had died on the mines 1979, 1980. You had a white mine workers strike at O'Keefe Copper, of all places. And the white mine workers went on strike countrywide. They went to the labor minister. They went to the mining minister. They went to John Forster. And they got the same answer from all 3. Newmont is an American company. We're not going to interfere with their hiring and promotion. Get back to work. Some did go back to work. Some didn't. Newmont fired them. So here you had a nationalistic government, and they lost all that union support, and they stood up. You know, does our government stand up to the unions? Our government follows the friggin' unions. They're our leading light. Okay, Aussie versus the S&P. This is when I started at HBD. In that little bit there, my fund did 130, then it pulled back a little bit. I joined HBD. I said, Mark, the world's never seen our market this cheap to the S&P. You'll never see it again. Well, I should know by now, never say never again. Because we're seeing it right now. That doesn't mean it's going to revert to the mean, although 95, 98% of everything in nature does revert to the mean. I'm an engineer. That's what holds planets, galaxies, the universe together, the laws of nature. Things revert to the mean. I learned by my second year of fund management, if I got a share wrong and it kept going down, I was so pissed off, I wasn't going to touch it. It can go to zero. I'm not selling it. I tried selling the first year and you got the market timing wrong and it went back up. So when I bought a share, I held it till it went to zero, which was less than 10% of the time. The other 90% of the time, the cycle turned in its favor or somebody took it over or a commodity price, it got saved. Sometimes you had hold 2 years, 3 years, but we're probably not going to revert quite like we did back in 2000. The MPRDA is a tombstone for the mining industry here. 10 years after Mandela got elected, the ANC did a double cross. They nationalized our mines. Mandela swore they would never nationalize the mines. They did. Even though they got 50 countries north of us, it shows what happens when you nationalize. They nationalized the mines in 2004. The market, when the rumor leaked out 2 years before, the resource index fell 33% in dollars. Our all share fell 26% in dollars, just on a rumor they were going to nationalize the mines. 2 years later, when they made it official, we took a 25% dump on the resource index, 18% dump on the market. So the rest of the world just bypassed us. They put tens of billions into Zambia and the DRC that are basket cases compared to us because we nationalized the mines, but to make sure nobody could dig up the grave, they poured concrete over it called BE. And the more you look at BE, they put rebar in it as well. Because not only do you have to give 30% to somebody you don't know who has no money and doesn't care, you got to buy 70% from somebody else who put no money in and doesn't care. So now all your traditional suppliers, rather than buy from them, and they employ hundreds of locals, now you buy from SIPO, who's fronting for a Chinese company. So we wonder why the mining industry went from 850,000 people to 450,000. 400 tough, experienced men with real jobs put on the street by our leaders. And no matter what your job was, when you worked for a mining house, Anglos, Rand Mines, JCI, you could go to the bank. You could borrow money for a house. The bank just saw your pay slip. You could get a loan. But when you're on the street, nobody's going to give you a penny. So what am I forecasting? Like Sean said, to me, the U.S. is in way too expensive territory. Not just because of a price relative, not just because of a PE relative. Earnings. Two things drive share prices. Earnings, expectations of earnings. Either on their own can drive it. But what happens when the earnings fall? You better have double expectations are going up. And if you don't, then the share price is going to fall. This is in real terms. I've taken out inflation. These are earnings of the S&P 500. This thing is out of a standard deviation. Now, last time it was out of standard deviation, you had the global financial crisis. It was a big correction. And I love corrections. That's opportunities. Buffett loves corrections. Sometimes Warren and I agree, 50% of the time. But look at the earnings here. They capped at $21.50 a share per S&P 500. They fell, and I thought they're going to keep falling, but now they're bouncing back up. I just don't know how you can hold it. These are the highest profit margins in the history of the United States. It's the highest percent of GDP. These are insane profits. And even if all these new technologies come through, like Sean said, they take a while to come through. This is just risky territory. Earnings might keep going up, but they can go up with your money because I'm not buying here. Okay, This is a small mistake. These are the all-share index earnings in dollars. Somehow I didn't do it in real terms, but if I put this in real terms, instead of being 330 cents, 320 cents, it would be way below 200. It'd probably be about 150 in real terms. So our real earnings aren't crazy. In fact, they're barely matching what they were at the end of 79, early 80. So you would say there's 45 years and our real earnings have hardly gone up. Not like the American market, whose earnings have really gone up. You know, to me, this is just obvious. Now, it's hung up a lot longer than I thought. That's fine. I don't care if it stays another year or 2 years. There's other places to invest, as Sean points out. One of those other places is South Africa. And not really because there's going to be a good positive political change, but I do think we've bottomed here. I think the ANC losing 50% is a real, not just a wake up. Not only do they have to think different, they now have to act different. And the world's taken cognizance of that. So the Aussie PE relative to the S&P 500. It's not looking bad, huh? It's still a standard deviation below the mean. So I always said, I do Forrest Gump investing, right? If it's above a standard deviation, I sell. If it's below, I buy. It's below a standard deviation. Our earnings have better than a 50-50 chance of going up. On a relative basis, I would much rather be here. Much, much rather. Probably the most powerful slide I've got, and then your people are free to ask questions. Global cumulative fund flows. Supposedly, these are all the funds going into investments in stock markets. Now, do you notice? Nobody looks very good except the yellow. Who's the yellow? Technology. So they're not just picking on mining. They're not just picking on South Africa. They're just favoring one sector in one country. This is global funds. And it's all going to technology, and as Sean pointed out, 70% of that's in America. So, look, some people they are penalizing, whereas materials, 8%. So mining's in here. South Africa's in here with a bunch of other people. So the world's not in love with us. They're in love with that. But fact is, for the last 12 months, our mining resource sector has outperformed the S&P 500 for the last 12 months. Didn't matter what day you bought. Doesn't matter what month you bought. The last 12 months, we've outperformed. Now, maybe that's a fluke. Our all share has outperformed the S&P for the last 12 months. Doesn't matter what day or week you bought the last 365 days, you are up. So you saw that reversion to the mean. Maybe it is bunkum this time. But this is pretty powerful. It's a safer place to be right now here in the stock market and probably other people's markets than I think the U.S. Last slide. The gold market can be as dangerous as an unhappy wife. We know that. In fact, you probably lose more with an unhappy wife. How much are you going to lose on gold? 10, 20%. Unhappy wife's 50%.
How much gold do you have under your bed?
I am shorting gold. By the time it cracked 2,200, after it cracked 2,200, I'm just too afraid, Bronwyn. You saw on that slide, it's way past the standard deviation, and it's uncharted territory. And we've seen what short squeezes do. I'm the short that's getting squeezed. But yeah, I'll give you an interesting fact. You've heard of American Barrick. You've heard of Newmont Gold. You've heard of Harmony Gold. My champion, I started at Harmony. They're all selling today where they sold 10 years ago. In fact, they're selling today where they sold 20 years ago. And Barrick wasn't around 30 years ago, but Newmont was. What do you think its price was 30 years ago? The same as today. So gold shares haven't been a good investment. But gold, we know, has been a fabulous investment. So I've shorted it. I've shorted Harmony, and I'm burning, but I can burn until I'm dead. I'm not going to close the shorts. It's too scary, and it could really go.
Beyond the mining stocks, do you have physical gold, Krugerrands, gold bars?
Yes, I do, but not very many. But I'll tell you what I've done with all my money. I'm diversified. A third of my money is in a logging camp in British Columbia. We're pulling red cedar out of a lake because there's no more red cedar. They're rare. The cedar price has gone crazy. A third of my money's gone into Canyon Silver, the first mine I started at. We're digging it out. Silver's okay. It's nothing like gold, but I can make money on that. We closed that mine with silver was 6 an ounce in real terms. Today it's 32 an ounce. The other third of my money is in a gold mine because, I don't care if gold falls from 3,000 to 2, my gold mine can make money at 990. So that's where it is, Bronwyn.
Am I allowed to ask the name of the gold mine?
Lone Pine Gold. And it's surrounded by other little gold mines. It's in northern Idaho, 5 hours below my silver mine. It's an area I never went to. One of my workers is from there. He is the best worker I've ever seen. He carries a gun. He's got a Bible. He's dead honest. And I said, I want to reward you, but I don't have any money. But he can operate any piece of equipment, and his brother's just like it. He says, come look at my gold mine. I've been begging you all year. And I went down and looked at it, and I gave him a deposit right there. Yeah, they were all shut down. World War II, 1942, Roosevelt closed all the gold mines in the States. So I'm bullish as heck. I can't wait to get back.
Let's talk a bit about the South Africa opportunity, which you highlight from your presentation. I want to drill down into where specifically you are seeing that opportunity. Can you be a little more granular?
Yeah. The PE, I think I did show a PE relative of our resource sector. It's actually neutral. And I hate buying and selling when things are at the mean, Bronwyn, because it could go either way. It's so easy. Even Forrest Gump, if it's the standard deviation above, sell. But I think the resources, they don't have the balance sheets they used to, because of all the genius test tube babies, propeller heads that came down from London in the 90s, to advise Anglos and other companies how you should really have a balance sheet. But I've got a couple Aussie futures, and that Aussie future has smoked the S&P future, like I said, for the last year. So I was shorting S&P futures, I shorted gold, and I was long Aussie futures, and they've held up pretty good. If you say individual stocks, I'm not good with individual stocks now. I haven't given them the time. I've wasted 20 years of my life now doing corporate finance, and I'm just managing a little money on the side for a couple long-term clients. But yeah, I think you can buy the Resi 10. I think it's safer than our all share, but they're very close. Both to me are just screaming much safer than the S&P 500.
Thank you for that visibility. Right. Let me have a show of hands in terms of questions. If I can get a mic down to the gentleman here. I saw a hand go up, and no, you don't give your mic away. Never give your mic away. All right. You're the one who's going to be answering the questions. You think I'm going to answer these
This
questions?
thing gets me in a lot of trouble.
Yeah. You just keep on holding here. Trevor, in the front, this gentleman here. Go ahead with your question.
Thank you for a very enlightening presentation. Second question. Your preference for gold miners versus gold and sun. There's always execution risk with gold miners, but in my view, the upside currently for gold miners is huge.
If gold stays here, you're right. If gold starts falling, we know. When the gold price falls, the miners fall much faster. And that's what worries me. I think Barrick is cheap here. But here's what's changed from the gold shares we used to know. From 1890 to 1990, the mining companies had control over everything except the price. Now they don't have control over anything hardly. Look at Molly. Molly just started kidnapping executives. They didn't care if they were Australian, Canadian, American. They just start kidnapping execs and they hold them to ransom. $150 million, $225. Barrick, they wanted $525. And Bristol built the gold mining industry in Mali from nothing. So, you can't control the politics, which is now the riskiest of all. You can't control labor, which is second risky. There's currency risk. There's grade risk. There's so many risks in a share. So I think the market's kind of built that in. I don't think there's deals out there. But granted, $2,950 an ounce, there's not one gold share discounting that price. It's like they're afraid it's coming down. But yeah, I feel happy putting my money in Lone Pine. It's me, 4 other people I know. We know what we can do. Those are patented claims. The government can't come in with the National Guard. It's our property. And like we heard earlier, everybody in America's got a gun, and they're not afraid to use it.
I want to go back to, you mentioned politics and how fundamentally important it is to investment decisions. You put up that slide, which had Zuma, Cyril with Marikana. You highlighted some of those punctuation points from a politics perspective. If in 2 years' time, you were going to put up another slide, how would you punctuate that picture with the politics unfolding in South Africa?
Right now, the slide I showed about the 3 men who built this country. I'd love to think there's 3 men out there. If they were half as smart as those 3, they could turn this industry around. I don't care what their color is. If they're just half as smart and they do what those 3 did. And people seem to forget, especially the ruling party forgets, the British and the Afrikaners were not exactly best friends in 1910. There was something called genocide in concentration camps. The Afrikaner bore the brunt of that. And yet, they were able to make up, work together for the good of the country. Now, I keep hearing from our politicians how much we still have to make up. So they're stuck in a time warp. So those 5 parties, they have done tremendous damage. There's a lot of parties that aren't up there that help bring about that MPRDA that are conveniently not there. Trevor Manuel, Thabo Mbeki. But that was just a monumental shift. If you think of Jan Smuts, when the white mine workers went on strike in 1919, he didn't just fire them, he flew an airplane over and bombed them. We thought Marikana was a wipeout with 48, 50 people. You know how many people were killed in 1921 miners' strike? 290 police and army, 390 miners. So, those guys were through it, but they were pragmatists. They dealt in what's good for the country.
I just want to check if there are any questions on this side of the room. Down here and down here. Thanks so much, Trevor. While that mic is getting to you on the politics side, what's Trump going to do for Lone Pine? I mean, is there any risk there?
You know what? I don't think Trump knows where Idaho is. And Sean had a slide in his presentation that showed Kamala Harris 33, Trump 66. And you know what was next to it? Idaho. So, yeah, I think if you're in a state with Trump, you want to be in Idaho.
Stay under the radar, in other words. Unlike the South African government, of course.
So not really a question, just a statement. Pete, thank you so much for a magnificent, enthralling presentation, as always. I'm so pleased you left North America and made your home here. It's very special. And then just hearing that you only got a few Krugerrands, you must have a really lousy advisor on that score. You need to fire him.
Look, those Krugerrands I bought from you, I used to buy Lone Pine.
I think there was another question here. There we go.
Thank you, Peter, for the insightful talk. There are a lot of cheap mining stocks on the JSE right now. Recently, we have Merafi, which has a PE ratio of 2, and the dividend previously last year of 35%. Would you say that these stocks are value stocks, or are they cigar buds or falling knives? Would you invest in them?
Tell me those 2 stocks.
You have Merafi.
Oh, Merafi.
Which I believe is a chrome miner as far as I understand. And then you have the large spinels from Anglo American, Kumba, Xaro, etc., Tungela. Can you just give some guidance on a retail investor whether you would actually invest in these stocks, avoid them, or just buy an index?
Look, as I said, I'm a top-down guy. So let's start with Merafi. They make their money on ferrochrome. But the Chinese, it's just like they did with rare earths. They decided they don't want to be too dependent on anybody for ferrochrome. They've now got Star Wars type furnaces that make Merafi had the most modern furnaces in the world 10 years ago, but they're now falling behind the Chinese. And China's electricity has not gone up like ours. That's what's killed Merafi, is our electricity prices keep going up. Yeah, the labor prices keep going up, always 2-3% above inflation. And if you look at the gold mines, I'm talking inflation, the gold mines cost per ton of rock, just moving rock out of a mine. The average man on the gold mine today is moving as much tons of rock as he did in 1939. And you know how they moved rock in 1939 with a wheelbarrow and a shovel. So we've got LHDs, rocker shovels, all this modern equipment. Our productivity has gone so down. So, yeah, you look at ferrochrome. Ferrochrome's dependent on stainless steel. Stainless steel's dependent on building. I think that's fairly stable, but I'm just worried about the costs. And now we have platinum mines that are exporting as much chrome as the chrome mines. And boy, you know what their costs are. That's a waste product, and they've used modern technology to pull the chrome out of those tailings. So I think we exported 22 million tons last year. I think the platinum mines did over 10 million tons. So the government loves showing, our tons of exported chrome are higher than ever, but it's killing our ferrochrome producers. ARM, they shut all theirs down. Yeah, I'm wary of Merafi. I saw that big drop. It may have dropped too far, but I'm wary of it. And then Kumba Iron Ore, if they get this rail sorted out, and a friend of mine called me and said, I know you badmouth the government all the time, Pete, but we've had such different negotiations with Transnet than we've ever had before. He said, if your audience wants a good news story, tell them it's coming. This new Transnet team, they want to make things work. We have trust on both sides. So Kumba, if iron ore price just stays where it's at, they will increase their production, because I think it fell from 55 million tons exported to about 40. So that's probably safer. They got big margins there. You got to watch them. These mining shares, you got to watch all the time. They're cyclical, and there's so many factors that can knock the feet out from under them.
Thank you, Peter. Sorry. And just your opinion on Copper 360.
I got called by I don't know how much I can say.
But please, nothing that's going to land either you or I in jail.
70, right? I got called by the MD a few weeks ago saying, I used to like you, Peter, but after Lisa Stain wrote that article, you said you wouldn't buy our share. We tore your picture up. It's in the bathroom. But she said, if you would buy 2 million of my shares, I'll put your picture back up. I said, surely we're all in an O'Keefe together. We're compatriots. We're not competitors. But I said, when Lisa called me, your share was $4.50. And my valuation didn't give a price. I'm not going to say it's a buy at $4.50 because I don't believe it. But at $2, I think you're worth looking at. I'll have to do some work. I'm not sure you're a buy, but you're worth looking at $2.
I do want to get some insight from you on, what's happening in the tent, the marquee, is Simon Beloy, the CEO of Sasol's.
Yeah.
You filled this room, and I know that there are a number of Sasol shareholders within the BizNews community. I know it's stretching you, but out of your territory.
Your timing's good. I put a buy order for Sasol on Monday, and I don't know much about it. It's a complicated company, but just on a price relative, a P relative, it's cyclical. I can't think oil's going to fall anymore. I don't think coal will fall much more. So, and there's a lot of things Sasol can do at this level. So, yeah, Major's bought a couple Sasol.
All right, so I'm going to share that with Simon Beloy. Question coming here from the second front row.
Thanks. Do you think BHP overestimated the copper prospects when they put their bid in for Anglo? Number one. And number two, lithium with changing technologies. Is that relatively safe today?
I don't think lithium's safe at all. It's too fickle. It's tricky to mine. It's tricky to refine. And boy, it's tricky to put in a cell phone. If you don't have the right amount of cobalt, you look like one of these ex-Hamas terrorists. Your head will be gone. And there's too many good people working on sodium batteries that don't have any of those problems. And one of those people is a big country run by a guy named Chi. So, yeah, this lithium price, it did what I really thought it was going to do. And I think 10,000 might be a bit cheap, but I don't want to buy something that I have to worry about at night. I just think there's going to be alternatives really quick on lithium. If it goes up, let the guys make the money. They took the risk, let them make the money. BHP, I think they should have fired that corporate financier that made them try and do that. Was the sloppiest bid for Anglos. They sabotage it themselves. We'll buy Anglos, but we don't want anything in South Africa. Well, hell, that's where the earnings come from, the cheapest assets. And then they want our government to support them after making a statement like that. So I think I was on the record saying I like Duncan Wanblad. I think he was a damn good appointment. He's Anglo blood. He's been there. He knows all the moving parts. He was doing the right things before. He's definitely done the right things since. Yeah, they must go get their copper elsewhere, And the shareholders voted overwhelmingly. They weren't interested. And look, he was offering a crazy price. I had a little bit of Anglos and I sold. I felt guilty. But that price, there was no way he was ever going to make that money back. So that corporate financier was as bad as the one that Sabanya got to go buy lithium and things. At least they fired their corporate, that French person they hired.
Yes, go ahead with your question.
Peter, Willem, share with us your views on platinum, palladium, and rhodium.
I go to the Platinum PGM conference held by Nedbank every January, and it's really good hearing the different opinions. Not so much the opinions, the facts. The one fact that really got me was palladium, because in the 1990s, diesel was the answer. The Europeans were pushing 50% of their vehicles were diesel, and the Americans were starting to do it, and the Japanese were even talking about doing it. Now it turns out 20 years later that it's harder to clean diesel than we thought, and the manufacturers that had traditional petrol, they've increased the efficiency so good that diesel can't really compete. It doesn't have that competitive edge anymore. It's still good for big vehicles, but it's dirty. So this market for palladium could really take a slump. Okay, that leaves platinum. And platinum, if you get a graph, it's behaved very flat. I think its long-term average for 100 years is maybe 1,100. And it's been at 950, 980. So it's actually trading about the mean. Rhodium is too unpredictable. Its long-term price is 3,500. Now it's jumped to almost 6,000. But it's just, that is such a small market. This country has way over 1 billion ounces of palladium, but the world can only take 7 million ounces. So all you need is one big mine and you flood the market. All you need is one big use of platinum palladium to fall away and the market's oversupplied. That taken, the market's efficient, and these shares fell very hard, from very high levels. Northern below 100 was a steal. I was buying it just because fantastic management. It's difficult ore body, but Paul Dunn is such a manager. He's got more under his control than any mine manager in this country. It's amazing. And he doesn't have the debt. But yeah, I'm wary. I just think these PGMs, they're at a neutral level now. They're slightly above the average. And as I said earlier, I just hate buying stuff if it's around the average. I want it to be way below the average or way above, and I'll short it. So I don't think you'll lose buying these platinum shares over a 2-3 year view, but they're not sexy enough for me.
Let me just have a look at I'm trying to manage room. Show of hands. Anybody on this side needing questions? You all good? And on this side of the room, we have to, because there are lights, bright lights shining into our faces. Just sorry, let me get you a mic so everyone can come in with you. Thank you.
Coming back to the BHP question, it was really based on what the prospect price of copper was.
Oh, when they were bidding for Anglos, geez, I think it would have had to be $12,000. Now, copper's 9,600. And we keep hearing Robert Friedland saying, you can't justify building a mine for less than 14. Now, he's a showman, but he's not that far off. Geez, we're trying to get O'Keefe Copper going, and O'Keefe will make money at $5,000 a ton. But when you factor in the time delays of getting your permits from government, believe me, time figures into an IRR. It's not the cost of the equipment, that freaking time, 2-3 years. So I think that was Billiton's idea. They said, let's make a half-ass bid. They obviously thought copper is going to 14. Here's something odd, though. Mergers and acquisitions. Remember, Brian Gilbertson merged Billiton with BHP, this conglomerate. All they've been doing since that merger is unbundling. Anglos, all they're doing is unbundling. So you wonder, why do people do mergers, destroys value, then they think they have to unbundle to restore value? It's
Keeps the corporate financiers in business, right?
That's all you can say.
I was listening to an interview by the Canadian Minister of Energy and Natural Resources, and he was commenting on the tariffs, the tit for tat between Canada and the US. We're now seeing 50% tariffs from Canada being imposed on the US when it comes to steel. And is aluminium? I didn't want to, but I couldn't work out whether it's just South African to say aluminium. Maybe you can help.
You're right. Americans always say aluminum, and Europeans, South Africans say aluminium.
But it is the same.
It is the same.
I'm so glad you still go back to those days when I was asking you stupid questions and you were answering them for me. I just didn't do it in front of an audience. But now, thank you so much.
I've never seen a guy shoot so much without thinking as Trump. And I liked it for a bit because he is the first guy to take on the Chinese, his first term. Every president that barely mentioned something got the biggest threats coming from China. And they tried that the first time with Trump. And it wasn't 3 weeks later, Xi told his press, hey, cool it. This guy's different. We're not going to get anywhere talking like that. So he knows how to handle it. And Mexico, you didn't see Mexico do any screaming when they did the tariffs. But frickin' Trudeau in Canada, and then now I thought the guy that replaced him, I thought Carney was more mature than that. But
so what does it mean for the economy between Canada?
It means ratings are going to go down because people are unsure. It's like, now you have a choice. Do I want to buy a mining stock in Canada, America, or Ukraine? The risk seems to be the same in all three now. Yeah, I don't know what it means. Look, I think it means if you're a miner in America, you're probably okay. It means Trump will defend you even if you shouldn't be offended. I think Americans could have slave labor in the mines now, and Trump would probably defend that. So, yeah, it probably does mean if Trump's running, I don't want my assets in the U.S. stock market, but yeah, I feel good having a mine there. Maybe the rating will be down, but it can produce. He'll probably give tax breaks for the mines. It depends who's lobbying him. We don't know who puts these ideas in his head. And it's crazy because remember the North American Free Trade Agreement? That was a monumental agreement between Mexico, the United States, and Canada. And it made so much sense. So it was just seamless going across. Americans have all the auto companies in Canada, and something like a quarter of their vehicles are made there. Now the other quarter are made in Mexico. And, is he tearing up that agreement by just saying, I'm going to start tariffing you guys? Well, what about this agreement? Because you can't have both. You can't sign a long-term agreement. Everybody's adhered to it. And now one party unilaterally does that. Bron, I don't know what else to say. It's crazy.
You don't need to say anything else, but I do want to tell everybody what you said when Sean Pesh stood down from the stage today. He said, I hate that guy. I hate that guy because my presentation looks exactly the same. So I'm going to drill down into some of the themes that Sean Pesh put up that you say correlate with your thinking. You've given us some insight, obviously, to your investment thesis. But this 32% allocation that he has, he's sitting right here in front, so I'm eyeballing you, Sean Pesh has in Europe. Do you think that is the right bet at the moment?
Yeah, I do, because Europe's a civilized country. They understand capitalism. They understand corporate. And I haven't looked at the P's of them, but you saw that last chart I go where all the money's going. 90% of the money is going to IT, and the 70 times 90 is all going in one market. So, yeah, I think I would sleep better having shares in Europe than maybe China, but we've got 2 Chinese JV partners. And one of them's lived in this country in Stellenbosch for 17 years. So he's 50% there, 50% here. And they both say Xi will not be premier at the end of this year. That he's upset the status quo, and China believes in balance. And he's been a bit dictatorial, and you could see you had some IT people disappearing like Jack Ma, and now he's bringing him back. And I give Xi credit. China's had massive inflows that funded that growth. I wish our leaders here could see what foreign investment does. China couldn't have done half what they did. They had more of inflows the last 30 years than the rest of the world put together. And what happened last year, they actually had a net outflow. And it's off such a big number that net outflow wasn't very much. He was on a plane flying to the States, talking to all the hedge fund managers and pension funds. Please, we want you to invest. So he's doing what he thinks is best for the country, and he's changed his tune. So, long answer. Yeah, I think Europe's the right thing.
And that 20% allocation into China / Hong Kong, Sean asked me the question, which did I think was more certain from a regulatory or from a political perspective, not regulatory, from a political perspective, the US or China. And it appeared, Sean, you're welcome to come and I'll give you a mic and write a response in a moment. But it appeared that Sean was calmer about the environment in China. You're saying that Xi is on his way out.
Yeah, but I don't think that's a negative for China. I think it shows their system works, and they don't appreciate him taking this unlimited terms now. They don't appreciate him not following tradition. You are allowed 2 terms like America. And hey, who's more capitalist than China, guys? Really. China's capitalist. Yeah, they call themselves communists. It's a bit of a smokescreen. I'm very happy having 1/3 of my money in the South African Aussie, 1/3 of my money in Europe, and I'm an ETF guy. Believe me, when I had a unit trust and I read about ETFs, I couldn't find any. There weren't any in 94, so I was buying futures. And I got penalized. I got taken over the coals. You're running a unit trust, why are you buying futures? But the future was an ETF. So 1/3 China, 1/3 South Africa, 1/3 Europe, I'd sleep like a baby.
Well, we hopefully will sleep like babies after taking that advice. Thank you so much to Peter Major. I apologize. There is a burning question in the room. I missed it. Yes, go ahead. Yes.
I had one other question for you. If you had to pick a miner in South Africa, which would you pick? And then second question, what's your opinion on Cobus Lutz and Pan-African Gold?
If I had to choose a miner, would I choose Pan-African Gold?
Well, if you had to choose a miner, which one would you bet? And let's say your name.
Jeez. And we don't have the choices like we used to, huh? When I was at Allen Gray, we had 62 gold miners. So now we've got Durban Deep, Sorda Sabanya, Harmony, Pan-African.
You want some water?
Yeah. Look, if gold keeps going, they're all going to do good. But to differentiate, I honestly couldn't make a choice. I think Quivus has done a really good job. He's very conservative, progressive. What he's done with those tailing dams is amazing. They're battling with their underground mines. And when I read that guys are battling with an underground mine with gold at 2,900, I think, my God, if gold just falls $200, then your underground mine is going to be almost worthless. So that's what worries me about Pan-African is we don't know how to mine underground anymore. The environment has changed too much, and the old guard's gone. Like I referred to the tons. The actual rock that comes out of a mine per man is what it was in 1939, 1940. So people have no idea how bad our productivity has fallen in our gold mines. We're the worst. And that's why the tailings guys do okay. But as soon as you go underground, so that's what worries me. And I think Pan-African knows it, but they paid I thought they paid too much in Australia, but if gold keeps going up, then you've never paid too much for anything.
There's a new gold miner coming to the Bourse, Aurus. Have you heard of it?
No.
It's old assets being renamed. You don't know about it. I'll have to take it
I'm not
offline with
punch.
you. I'll take it offline with you.
Okay.
I don't know if there's anybody in the room that knows about the imminent listing of Aurus Gold. Well, that makes it adamant that you have to come back next time, because Peter Major is going to do his research on Aurus, and maybe we'll have even had the listing by then. Thank you very much, everybody. Peter Major.
Right now, you can get the cheapest Forex rate around, right here, on Shift. Pay less for your dollars, pounds, and euros here, and get to shop more here, and do more here, and enjoy more ooh la la here. Shift also lets you trade and transfer currencies, and buy shares in the world's best companies. It all happens right here on Shift. You won't find a cheaper Forex rate anywhere else, no matter where you bank. Download the Shift app today.
In the world of business banking, projections, numbers, and your bottom line can often triumph over relationships. At Investec, we value both. That's why we understand that running a successful business takes endurance, drive, and partners who are willing to walk the journey with you. Make the move from business as usual to Investec Business Banking. Out of the ordinary.
Downings is South Africa's leading marquee infrastructure company, proudly celebrating 25 years of excellence, renowned for creativity, innovation, and unmatched technical expertise. Our event marquees and semi-permanent structures elevate any project with style and sophistication. Whether it's a corporate event or a commercial project, we tailor every structure to meet your needs with world-class precision. Visit downings.co.za to consult with our expert team. Downings, your trusted marquee specialists nationwide.